we are unpacking the layers of the Toronto real estate market. We are not necessarily looking like we're going to be in a market that's going to recover very quickly. What the market has done over the past 12 months, it's been an absolute roller coaster of a year in Toronto real estate. All right, so let's jump right into it. Let's look at the numbers from just last month. So for November 2023, pricing was fairly flat when we look at month to month and year over year. Back in November of 2022, the benchmark price was $1,064,100. This year in November of 2023, we were at $1,064,800. So fairly flat. Numbers haven't really moved in the past year when we look at year over year. Now, when we look at sales numbers from last month, sales were down about 6% when we compared to 2022. And then new listings were up 16.5% when we look at the same period last year. So that's quite a big jump in listings with fewer sales. So a lot of you understand, and it's very clear to understand from those numbers that we're very much still in a buyer's market. And that has been the trend for the past 3 months, and it's unlikely to change much moving forward, which leads me into some of the advanced statistics that I like to look at. I call them, they're under the radar statistics because we don't really hear a lot of people talk about them. The two statistics that I like to look at that kind of determine where the market's at and where it's headed is months of inventory and sales to new listings ratio. So they sound self-explanatory. I'll give you a quick explainer. Months of inventory is if there were no new listings to hit the market from this point going forward. It's the amount of months it would take to sell off that inventory. Sales to new listings ratio is the amount of sales there are to new listings that hit the market over a certain period of time. So for months of inventory, we are currently sitting at 2.7 months. Now, a balanced market is about 2.5 months. So we're 0.2 above where a balanced market is at. When we look at last year this time, we were sitting at 2 months of inventory. So within 2 months, we could have sold off all of the inventory. Now, you could say 0.7 doesn't seem like a big difference. Well, it's a big difference when we combine the months of inventory with the other advanced stat, which is sales to new listings ratio. So right now we are sitting at about 45% sales to new listings ratio. So only about 45% of listings that are hitting the new listings that are hitting the market are selling within a given period of time. Now, in hot points of the market, so back like in March of 2022, we saw sales to new listings ratio of like over 70%. So 70% of new listings that were hitting the market were selling almost immediately. We are not seeing that right now. So when we combine months of inventory that's already trending upwards, and has been trending upwards for the past few months, with sales to listings ratio that continues to drop, we are not necessarily looking like we're going to be in a market that's going to recover very quickly. Thanks again for watching. If you liked what you watch, please hit like, subscribe, hit that notification bell for more content coming that's just like this. Real estate, as in life, the next big thing might just be where you least expect it.